Tesla stock splits 3-for-1. What does that mean for the stock? Hey everyone, Ian King here with your Winning Investor Daily YouTube update. Thanks for joining me. We're going to talk about Tesla's big 3-for-1 split, and I'm going to go into some more data on what it means for stocks that split and how they've performed over time. But before we do that, please, if you like our content, feel free to smash that like button, subscribe to our channel if you haven't subscribed yet, and feel free to leave any comments below. We love hearing back from you, and we will address those in future updates. Now, the big news today is that Tesla has split 3-for-1. So if you check your account, you'll see that Tesla is now priced at about $294 a share. It was 800 and something yesterday. And now if you had 10 shares, you now have 30 shares of Tesla stock. Or if you had 50 shares, you have 150 shares of Tesla stock. So you got 2 shares for every stock share of Tesla that you had. And what is it going to mean for Tesla stock? Well, I grabbed some research from Bank of America on stocks that have split and how they've performed over time. And I want to share that with you right now. So please take a look at this table right now, Exhibit 1. This is from Bank of America research. Companies have outperformed the S&P 500 by 16.3% after split announcements. The average performance of companies that have announced splits since 1980, you can see right here, the black bars are the S&P 500, and the blue are the ones that had stock splits. Over 3 months, it looks like they've outperformed by over 5%. Over 6 months, they've outperformed by 9%. And over a year, the stocks that have split have outperformed the S&P 500 by about 16 percentage points. And that's going all the way back to 1980 on that data. And even furthermore, there's another exhibit that I want to show you from Bank of America research, and that's that discretionary and tech have performed the best after splits. So discretionary is up 17% over the next 12 months. Technology is up about 16%. And then you've got healthcare, financial, staples, industrials, real estate, materials, energies, and utilities. Utilities faring the worst, almost equivalent to what the S&P 500 return is. But, utilities are smaller growing companies anyway. And you can see right here, technology at number 2, right behind discretionary. So what does that mean for Tesla? Well, Tesla is a technology company. This is the second split that they've done in 2 years. The first split was done in August 2020. And let's take a look at Tesla's chart just to show you how the stock performed during the last split. Let me bring this up right now. So right here, you can see this is a chart of Tesla dating all the way back to 2017 here. Each one of these little candles is the weekly performance. And you can see that Tesla split 5-for-1 in August 2020 right here. And when they announced the split, the stock actually rallied 81% ahead of the split. And then it went up again after that. And then Tesla had this incredible rally, obviously, in 2020 and 2021, and then peaked here in November 2021. So here we are in August of 2022. Tesla announced the split back in about a month and a half ago. And so we've seen a rally in the stock since they announced the split. We now have the split. And so what does that mean ahead for the stock? Are we going to get another huge rally like we had last time? I don't necessarily sure that you're going to see a rally like this. This took Tesla from 80 all the way up to 280. So the stock effectively almost tripled after it split 5-for-1. The market is obviously a little different right now, especially with interest rates going up. The good news, though, is that with the new legislation passed by Congress, the Inflation Reduction Act, it's going to give more tax credits to Tesla to allow them to sell more vehicles. Some other good news on Tesla is that you're starting to see better vehicle output in China because, China was struggling with COVID-related production slowdown and supply chain problems in the second quarter, but now you're seeing them ramp up vehicle production again in China. And then additionally, with the tax credits here in the US for electric vehicles, most analysts on the street have Tesla as a buy with higher price targets from where it is now. Now, I don't think the stock is necessarily going to triple, but I do think it will outperform the S&P 500 after the split. Number one, now you make the stock more available to retail investors. So instead of paying $900 a share, for $300 you can buy a share of Tesla. And also, the stock just has really good momentum in general with the auto industry, with the big EV megatrend that is shaping up this decade. So that is what I think is ahead for Tesla. And that's it for this week's Winning Investor Daily Update. Any questions or comments? Would love to hear from you. Did you buy Tesla before the split? Are you holding through the split? Love to hear from you in the comments. Please hit us up and we will happy to address that in a future webinar. Thanks again for tuning in and have a great weekend.